Good evening, everyone. I welcome you all to this evening class pertaining to the revision of some important topics related to our GST syllabus. Until last lecture, we have covered some pertinent issues in the GST law relating to the basic law, the procedure, and the last class, if you remember, was majorly dealing with the provisions on the import and export under the GST law. Now, today we are going to proceed further to understand some more provisions. Rather, today's provisions will be more of mixture of many chapters, whereby we will be discussing the different procedural part provided in the GST law relating to refunds. Thereafter, relating to the topics of job work, assessments, inspection, and if time permits, the other chapter on search, seizure, and demand. So this is broadly the target today. We'll try to cover maximum of this today. And if something is left out, that will be merged with the next class topics. So let me start with this refund chapter. Now, refund is something which is very close to the heart of taxpayers. So the first thing which is very close to the heart of the taxpayers is input tax rate, because that is one of the benefits provided under law. And then equally, the other part is refunds. But when we talk about refunds, we have to understand that refunds is not a complete right provided to the taxpayer. A refund is a type of a benefit whereby under specified circumstances, point number one, and point number two, subject to compliance of some predefined conditions and meeting the restrictions, where the law feels that it is appropriate to return back some portion of the amount paid, deposited by the taxpayer, the law allows you to get it back by applying for the refund. And at the same time, it allows the departmental officials to run through your application and to analyze it from various fronts. Firstly, the legal part, whether legally the refund is maintainable, and then the procedural and the restriction parts. Once all these stages are through, then the department will provide you or sanction you with the refund, and you will get the money in your kitty. So this is broadly the provisions relating to refund. So the main section for refund is 54, which is for all taxpayer except the UIN. For UIN holders, it is 55. 56 provides that in case the refund is given to you late, what would be the interest from when it would be calculated. Very important, 57. So the refund provisions, when we go through, you'll find that they are negatively drafted, which means that the refund provisions are so drafted, or the language is so drafted, that it says that wherever refund is applicable, it would be transferred to the consumer welfare fund. And then it says it won't be transferred to the consumer welfare fund, but paid to the taxpayer in certain cases. And then they have listed out those cases. What is a consumer welfare fund? So basically, the ideology is that where any tax is paid wrongly or in excess, that tax is not constitutionally even available to the government. Because Article 265 of the Constitution says that no tax can be levied or collected except with the authority of law. And where the law has not provided you to levy or collect a particular tax, but you have collected, which I am saying as wrong collection or excess collection, in that particular case, that tax cannot also be retained by the government. Now, if I am applying for the refund, so first step is to check whether this tax has to be refunded. Second is, if the answer is yes, the second question is to whom? To the applicant or to anybody else? Now, generally under the indirect tax law, it is that the supplier who is in the business, who is regularly dealing with that particular goods services, will come to know first that if any refund is available. Now, whenever the supplier will apply for refund, the law will check whether the incidence of tax has been passed on by the supplier or borne by the supplier. If the supplier has borne the incidence of tax, the refund will be given to the supplier. But if the supplier has passed on the incidence of tax, then the refund cannot be given to the supplier. And in case the recipient or the person who has borne the tax incidence is unavailable, is not identifiable, then the refund goes to the consumer welfare fund. So that is how this consumer welfare fund concept has come. So it is basically a fund created where the money which is deposited in this fund is available for free utilization by the government for the specific purpose of educating or making the consumers aware at large. That is what 57 and 58 provides for. Then you have Chapter 6 of the IGST Act, which deals with refund of IGST to international tourists, whereby Section 15 says that if a person who is an international person who is visiting India on a tourist visa and after staying in India is returning back, if he has purchased something which he is taking back along with him and he has taken a proper invoice, then on the airport, the person can show the invoice and the custom authorities will return back the GST which this person has paid at the time of purchase. Interestingly, there is also a provision in the IGST Act which provides that whenever a foreign tourist purchases anything which he intends to take back home, then he should inform this to the supplier and the supplier would charge IGST, not C plus S, even though the supply may happen over the counter and even though the place of supply is the same place as the supplier's place. It means even though it is an intrastate transaction otherwise, but because of the operation of the particular section in IGST Act, IGST would be levied and this same IGST can be refunded at the airport if the tourists comply with the necessary requirements. And then you have some specific rules relating to refund. So you have application for the refund, which may be for tax portion or interest penalty, any amount which is paid in excess or where the law provides refund for the same. After application, the portal provides an acknowledgement. If everything is in proper, you will be granted a provisional refund. And after going through all the details of a refund application, if everything is found in place, you will be given the final sanctioning refund order. Thereafter, if the refund is not found to be proper and it is rejected, the amount which is rejected shall be recredited because whenever you apply for ITC refund, the portion which is applied by you is debited to your ITC ledger. So in short, to that extent, your ITC is reduced. However, if this refund is rejected, the amount is recredited to your ITC ledger. Then order sanctioning interest. We saw there was a provision above which provided for interest if the refunds are delayed. So you also have the provision whereby there is an order which allows you interest. And then refund of tax to certain specified persons. Then refund of tax paid on inward supplies of goods received by canteen stores department. This is the government department, the government canteen. Refund of integrated tax on goods services exported out of India. Export of goods or service under bond or LUT. Recovery of refund of unutilized input tax or IGST paid on export where export proceeds are not realized. If you recall in the previous class when we were dealing with the definition of exports, these points were covered over there. And finally, the rule relating to consumer welfare fund, and in some specified cases, manual filing of the refund application. So these are some specific points relating to refunds. Now let us run through the relevant provisions. So firstly, in what scenarios you are eligible to apply for refund? This is the first significant point which you should understand and you should also remember for the purpose of your exams. So first scenario is wherever either there is a physical export or there is a supply to the SEZ, which may be SEZ unit or SEZ developer. Now, the first possibility is you are doing this with payment of tax, that is with payment of IGST. Second, where the same thing is done by you without payment of IGST, in that particular case, since there is no output tax paid, so here you apply for refund for the unutilized input tax credit. Now, for this, firstly, you have to make an application. The application form is RFD01, whereby you will be applying on the portal online for demanding the refund. In case there is an upward revision in price post-export, there is a specific provision where you can now even apply for refund only on the relevant upward portion. Now, why this portion was required to be separately added? Because the portal is so designed that whenever you are applying for refund, you have to match the refund details from the IceGate portal, that is the customs portal. Now, this is done only once when there is actual export or when you provide the details that you have supplied to SEZ. Now, the portal does not make this matching anytime later. So let us say after a few months, where it is found that there is some debit note for upward revision of price. Now, definitely if the price or value has increased, the extent of IGST on that much value will also increase, which has to be refunded back. So that is why there is a separate specific reference in law, which was earlier missing originally when the law was created. Next is registered person can claim refund of any balance in the electronic cash ledger. So we all know in the electronic cash ledger, the amount is deposited either by the taxpayer from the authorized bank or by way of TDS TCS, the balance may be deposited in your cash ledger. Now, if this amount is remaining unutilized, you are given the option that you can claim the refund of this amount. Next is refund of IGST paid on goods exported outside India. In such a case, there is no need of filing a separate refund application as we saw above RFD01. The reason is the law says the moment you file the shipping bill at the port, the filing of shipping bill is in itself a claim for refund and there is no need for a separate RFD01 application. Then comes the next category wherever you are making deemed exports. Again, in the previous class, we studied this, that as per section 147, certain transactions will be notified as deemed exports. And whenever there are deemed exports, in that case, either the supplier or the recipient, anyone can apply for the refund. But the procedure is firstly, the supplier will upload the transaction in the GSTR1, then again in GSTR 3B and pay the tax. So firstly, the tax has to be paid. After filing the 3B and making payment of tax, then either of the two can make the application for refund. Now the question is, in case of deemed export, there could be a possibility that whatever the supplier is supplying and the buyer is receiving that item, what if that particular item is part of section 17.5, that is block credit? Because in such a case, If some credit is blocked, the question is whether refund will be available. So for this, it has been clarified that the ITC of tax paid on deemed export supplies allowed to the recipient for claiming refund of such tax paid is not ITC as per the provisions of the Act, and therefore the ITC so availed by the recipient of deemed export supply would not be subjected to provision of 17. So it simply means that even if a particular item is covered under 17.5, that is, it becomes a block credit in normal scenario, but for the purpose of the refund of deemed export, because if let us say supplier has paid tax and now it is appearing as input tax credit in the GSTR 2A 2B of the recipient, and now the recipient wants to claim refund of this, which is allowed as per the deemed export provisions. But the question comes, what if this particular ITC is a block ITC? This is clarified that even if it is blocked ITC, such ITC availed by the recipient of deemed export for claiming refund of tax on supplies regarded as deemed exports is not to be included in net ITC for the computation of refund of unutilized ITC on account of zero rated supplies or on account of inverted rated duty structure. So it simply means that you will be fully getting the refund under the deemed export category itself, and you need not include it in your net ITC for computation of any other refund, because anyways this amount will be fully refunded through the deemed export route. Then the next category where refund is eligible is whenever you are making supplies to SEZ unit or to a SEZ developer. Next is, if you remember, a CTP or NRTP when applying for registration has to make payment of tax in advance. Now, if let us say they have made the payment of tax, which is in advance, and after the computation of their actual tax, it is found that the tax paid was excess. In that particular case, the CTP and RTP can apply for refund of this excess tax. Next, very big question in refund is, wherever refund accrues to you in one of the above scenarios, what is the timeline within which you should make application for the refund? The answer is 2 years from relevant date. It has been clarified that the time limit of 2 years is not applicable in case of refund of excess balance in the cash ledger. Because cash ledger is your own money, you can file refund for this in any period of time and there is no time limitation applicable. In case where proper officer has issued a deficiency memo to the applicant requiring him to file a fresh refund claim, the time period from the date of filing of refund claim till the date of communication of deficiency in the prescribed form by the proper officer shall be excluded while computing the 2 years period. So in short, where you had already filed for refund, which was rejected by the officer, and now you will be refiling, in such case, the time period between which the refund was filed and the officer issued the deficiency, that time will be excluded when you are filing this refund application again. Now, since the time limit is 2 years from relevant date, it is important to understand what is relevant date in different scenarios. So this has been defined in explanation 2 to section 54. How does this explanation defines relevant date? So it says that in case of goods which are exported out of India and refund is applicable, what will be the refund, relevant date, that is within which you have to make application from that date within 2 years? The date is where goods are exported by sea or by air. The date on which the ship or the aircraft in which such goods are loaded leaves India. Second, where the goods are exported by land, the date on which such goods passes the borders of India. Goods are exported by ports, the date of dispatch of goods by the post office concerned to the place outside India. Then, where exports are in the nature of deemed exports under section 147, date on which the return relating to such deemed export is furnished. And as you remember, I had mentioned that the supplier has to file the returns and pay the tax and then ask for refund. So it is irrespective of fact whether the refund claim is filed by the supplier or by the recipient. Next, in case of zero rated supply of goods or services or both to SEZ developer or SEZ unit. It will be the date of furnishing of return under section 39 in which you have disclosed this supply to SEZ. Next comes a scenario where services are exported outside India, where refund of tax paid is available in respect of services themselves. In such a case, that is in case of zero rated supply by notified class of person or supply of notified class of service as may be, the inputs or input service used in respect of such service. Then the supply of service has been contemplated prior to the receipt of such payment. The date of payment in convertible foreign exchange or in Indian rupees. Payment for the service has been received in advance prior to the date of issue of invoice, the date of invoice. So in case of service, since there is no physical movement proof, then what will be the relevant date to count 2 years? The answer is first, where service is provided first and then the payment is received, the date of receipt of payment. Where payment is received in advance but service is provided later, then the date of invoice. So this is the relevant date to count 2 years for deciding the application for refund. Next, where tax becomes refundable as a consequence of judgment, decree, or court order, then 2 years will be counted from which date? The date will be date of commencement of such decree, judgment, etc. Next, wherever refund is available on account of inverted duty structure. What is this inverted duty structure? Inverted duty structure is a scenario where your inward supplies are liable for tax at a higher rate as compared to your outward supplies. So example, outward supply is 5%, but inward supply is 18% or 40%. Then this scenario is called as an inverted duty structure scenario. In this case, you will be allowed to claim refund of the unutilized ITC. Now you'll be having unutilized ITC because your inward rate is higher and your outward rate is lower. So there is a good possibility you will have accumulation of ITC. This ITC can be claimed as refund. What is the relevant date? It is the due date of furnishing of return under 39 for the period in which such claim for refund arises. So the period in which you have sold those goods on which the output rate is lower, that period's return due date is the relevant date. Then comes the next point. In cases where tax is paid provisionally and thereafter final assessment is made, and during final assessment, it comes to the notice that the tax which were paid provisionally were higher or more. So now you want the refund. So obviously, when the refund becomes eligible, only when the adjustment of tax happens after the final assessment. So only when final assessment will happen, you'll come to know that yes, the taxes paid were higher. So now I can claim for the refund. Next, in case of a person other than a supplier. So wherever there is a tax payment which is more than what is provided in the law, and the incidence is passed on by the supplier to the receiver. So here the recipient only can file the refund application. So what will be the relevant date for the recipient? It is the date of receipt of goods or service or both by such recipient. And in any other case other than the above, it is the date of payment of tax. Next, clarification on bunching of refund claims across financial years. So firstly, if you see the law and the procedures, originally, if let us say you're a monthly filer, you are required to file the refund application also monthly, but this was cumbersome. So then the law was amended to provide for bunching of multiple months. So now it is possible for you to either file refund application for each month separately or combine months and file it for 4 months, 6 months, 8 months, 10 months, any period together. Now in this, there is a clarification. Let us say I want to file refund application for 6 months. The 6 months are from January to September. Sorry, not September, January to June. Now in this case, when I have to file refund for these 6 months, January to June, 3 months are in one financial year and the remaining 3 months are in the other financial year. In this particular case, the question is whether such type of bunching is allowed. So it has been clarified or it has been provided that you can bunch the periods which are spread across different financial years. So there is no compulsion that if you are applying for multiple periods or months, quarters, it has to be falling in the same financial year. Most important is that whenever you are applying for refund, you should authenticate, you should prove the claim for your refund, and that will be through proper documentary evidences. I think these are the important points relating to refunds. Mm. Then there are some procedural points that where the refund amount is less than or more than 2 lakhs. So if it is more than 2 lakhs, you require a certificate in annexure to by your chartered accountant or cost accountant. So these are some procedural points. Then there is a circular which has prescribed the manner in which application for refund may be made by unregistered persons. Generally, this happens in case where the buyers are eligible for refund. Now, the buyer may be a consumer, a person who is not engaged in any business. So how will a person who is not having any registration number on portal apply for refund? So there is a specific circular which provides for the mechanism. So you have the entire procedure. So we'll skip the procedure because the law part is more relevant. Yes, you should once read the procedure also, but we are skipping it for the want of time. Now, next important aspect in refund is the principle or theory of unjust enrichment. Now, what is the literal meaning of unjust enrichment? Unjust means unfair. Enrichment is getting benefited mainly monetarily. So when you are getting unfairly monetarily benefited, that is, you are receiving some money or some amount which does not belongs to you. It is unjust enrichment. Now, what is the theory of unjust enrichment in relation to the topic of refund? So when we talk about refund, you are asking back for some amount which is deposited paid to the government. Now, the simple theory or the provision for unjust enrichment says that the person who has borne the tax burden, the duty burden, is the person who is fairly, justly entitled to the refund. So, as we all know, in case of indirect taxes, generally the tax incidence is passed on by the supplier to the recipient. Now, in such cases, where the tax incidence is passed on, the tax burden is passed on, then legally, logically, the recipient or the buyer should get the refund because the buyer has borne the tax burden. Now, if the refund is given to the supplier, it will become unjust enrichment and it will be unfair advantage to the supplier. So, this provision under the GST law, which is borrowed from the previous excise and service tax law, states that whenever there is a refund, it should be paid only to the person who has actually borne the tax incidence. This is what is the principal theory of unjust enrichment. So wherever the buyer or the recipient has borne the incidence, the buyer or resident should get the refund and not the supplier. Now, where the buyer is not identifiable, in such cases, the amount will be credited to the Consumer Welfare Fund. Now, as I mentioned at the start, the provisions are negatively drafted, which says that the refund will be transferred or credited to the Consumer Welfare Fund. So first it says that the refundable amount, so that is the amount which is entitled to be refunded, cannot be kept by government also. Samely following the principle of unjust enrichment, because then the government will be unjustly enriched. So even the government cannot keep the amount. And then it says that this amount, which is to be refunded, either it is credited to Consumer Welfare Fund if it is not given to the entitled owner. But then the negative drafting of the provision says that it will not be credited to the consumer welfare fund in following cases. So instead of being credited to consumer welfare fund, will be given to the applicant. So this is where, in short, this is the scenario when refund will be given to you and not transferred to consumer welfare fund. So what are these provisions when you will be getting the refund? One, refund of tax paid on export of goods or services, or both, or on input services used for making export. So one, when you are making export, so either refund of the output tax or the ITC. Second, refund of unutilized ITC in case of zero rated supplies made without payment of tax, or accumulated ITC on account of inverted duty structure. So the second scenario where you will be getting the refund is where you have made a zero rated supply without payment of tax, or wherever there was inverted duty structure. Next, refund of tax on a supply which is not provided. So it may happen that you have paid tax in advance under the presumption of that there will be a supply in future, but later on the supply does not happen. Now we all know GST is applicable only when there is a supply. If there is no supply, there is no question of refund. There is no question of tax. Hence, if any such tax was paid, but the supply was eventually and ultimately not provided, the tax has to be refunded. Next, refund of tax in pursuance of Section 77, that is where you have classified the tax, the supply wrongly. Intrastate is classified as interstate and IGST paid. So now you can pay the correct tax and get the refund of IGST paid, or vice versa. It is an interstate supply, but classified as intrastate supply and wrongly C plus S paid. So today you pay the correct tax IGST and get the C plus S refunded. The tax and interest, if any, or any other amount paid by the applicant if he had not passed on the incidence. So the general point is wherever any tax interest is paid which is eligible for refund will be given to you only if the incidence is not passed on. And last is the tax or the interest borne by such other class of applicants as the government may specify. So that's it. So all the provisions relating to refund are discussed. So let us move on to the next chapter then. After refund, the next topic is job work. Achha, before that, if any question, doubt is there, please put it across relating to refunds, if it is there. Yes. Anybody has any questions? No? Fine. Now we go to the next provision, which is job work. Before I come here, let me take you to the main provision because that is also important. So we all know what is job work. So in simple words, job work is defined as a treatment process undertaken by a person on goods belonging to another registered person. So what is job work? Where, let us say, when this happens in case of automobile manufacture or today in any major product manufacturer, the main OEM, that is the original equipment manufacturer, the OEM itself does the entire manufacturing. It outsources some part of the manufacturing to some other person. So let us say you have given me the work of manufacture, but you are the original manufacturer and some component, some part which is required in your vehicle that you are getting it made from. So let us say you are getting the tires from me, you are getting the seat cover done from me, or you are only getting the small painting service from me. So there could be different activities which could be done as a part of job work. So it is defined as treatment process which is done by one person on goods belonging to another person, and this other person should be a registered person. Now, whenever there is a job work service, there is no dispute about whether it is goods or service. It is clear that job work will always be service. But there is something very specific relating to job work that we need to understand. That is a procedure provided for job work in section 143. Now, what is this provision provided, or what is this procedure given? So basically, 143 says that. Now, see what will happen in case of job work. Now, we'll use a terminology. Let us say I am the OEM, original equipment manufacturer. So I'm called as a principal. And let us say you all to whom I'm sending the goods, you all are the job workers. Now, when a principal is following the job work modality for completing its manufacture, so what happens? The principal will be sending the goods to the job workers. Hmm. Now, the principal, that is in this case me, will be sending the goods to you. Now, these goods can be in raw material form, they can be my semi-finished goods, or they can be my goods which are now near to completion, only some small process like painting, etc. finishing is what is left. Now, in this case, when I'm sending my goods to you, there are two aspects which is important. One, whether this sending of goods to you supply, definitely the answer is no. Second, if I am sending my goods to somebody else and if it is not a supply, am I required to reverse my ITC? Again, the answer is no. This is what is provided in section 143, that whenever a supplier sends goods to the job worker so that the job worker can carry out the job work operations, in such case, this sending of goods is neither a supply for the principal nor there is any ITC reversal applicable. Second possibility is, at times, when my raw material is coming, instead of bringing it to my factory, I can directly ask my supplier to deliver the raw material to the job worker's premises. This is also allowed. Again, the question is, where the goods are not received at my premises, can I be eligible to take ITC? Again, the provision says yes, because the ultimate objective is, or the ultimate, you can say, the uh, what do you say? In essence, the goods are always mine. Only for a temporary period, I have sent it to you or your premises for undertaking of any activity. For this purpose, the law says, firstly, on the inward side, I am eligible for the ITC of these goods. On the outward side, I am not going to pay any tax because it will not be regarded as supply. But then this comes with a very important condition that these goods should come back to me within a designated time. Second, either come back to me or on my instructions, you should directly transfer it to my customer or you should send it for export within the designated time. If this is done, then there is no liability on my end for sending the goods. Similarly, when you are returning back, there is no liability on you on the value of goods. You have to only discharge the tax on the service portion, that is the job work charges. But what if you have not returned back the goods to me in time? Then there will be some tax implications. That is what we have to understand. So if you have understood this backdrop, I'll read out the important provisions so that they will be revised for you. So what does it says? Principal can send the goods to job worker without payment of tax. So what we are studying is section 143. So 143 says that a registered person called as principal is allowed to send either the raw material inputs or semi-finished goods or capital goods to the job worker without payment of any tax. And one job worker can further send it to another job worker after completing its job work and then bring back such goods without payment of tax. payment of tax, or allow the job worker to remove the processed goods for supply directly to the customer. So all these things can be done and there will be no tax implication on this particular goods. Yes, there is tax implication on the job work charges because that is what is the supply you are going to give to him. But these goods which are traveling between me to you, you to another job worker, or back to me or to my customer, there is no tax implication. But for this, it says that such goods needs to be removed under intimation to the proper officer by following some prescribed procedure. Now, the principal can also send the inputs capital goods directly to job worker without bringing them to premises. So, as I said, when I'm purchasing these goods, these capital goods, I can get it directly. I can ask my supplier to directly send it to you and I need not bring it to my premises. That is also allowed. However, now all this comes with a timeline. This timeline has to be respected. If not, what are the consequences that we will discuss? Now, what is the timeline? The timeline is whatever goods I have sent to you, that is the principal has sent to job worker, should be returned by the job worker within a period of 1 year and 3 years. 1 year is for inputs, 3 years is for capital goods, and this timeline is counted from the date when the goods were sent by me to you. This period can be extended by the commissioner for further period of 1 year and 2 years respectively. Extension is allowed to cover the situation where the period of 1 year is not adequate in respect of the job work. So let us say where the nature of job work is such that 1 year is not sufficient to complete job work. Like they have given example, hull construction. Hull means the ship's body. So which is huge. So many times it takes a lot of time for the job worker to complete the work. Or let us say where these ships are fabricated for defense purposes. There are many things which are to be uh, implanted into the ship to provide it the strength, to provide it the different functions. So for this, it takes huge time because the worker who is doing that will require lot of precision work and lot of minute work. So it takes a lot of time. In such special scenarios, the timeline can be extended by the commissioner. Importantly, these timelines will not apply if principal has sent these things to the recipient, that is a job worker. What are these things? Molds, discs, jies, fixtures. And in such cases, even if these are not written at all, there should be no challenge because there is no timeline provided for its return. Now, what are the different possibilities once I have sent the goods to you? After processing, the job worker may clear dispatch the goods under the instructions of the principal too. So you can do the following things. You can send it to another job worker for further processing or any of the place of business of the principal without payment of tax. So I can ask the person to send it to any of my other branches or to the ultimate customer against payment of tax. But this payment of tax will be by me because eventually my goods are going to the consumer. Further, supply of goods directly from job workers' place or premises. So, where after processing, the principle that is I want that the goods should go from your premises directly to my customer or even can be sent for export. These things are also allowed. How? The facility of supply of goods by principle, that is by me to the third party directly from your premises on payment of tax in India with or without payment of tax for export may be availed by principle after declaring premises of the job worker as his additional base. So this is very important that if I want that this facility is allowed to me that I can directly dispatch my goods after they are processed by you to the customer or for exports, I should include your place in my GST registration as additional place of my business. However, such declaration will not be required where the job worker is already registered under Section 25 or principal is engaged in supply of notified goods. So in those two cases, I need not report your place as my additional place. Next, in such cases of direct supply, the supply of goods will be regarded as supply by the principal and not by the job worker. Obviously, because I am always the owner of the goods, they were sent to you for small processing, because of which you never become the owner of the goods. So in such cases, where goods are sent by principal to the job worker and the job worker is directly going to supply it further. So there is now going to be a supply, but that is a supply by the principal to the third party and not by the job worker. So it is clarified that the time, value, and place of supply would have to be determined in the hands of principal, irrespective of the location of job worker's place premises. So when we are determining the different provisions of the law, like time of supply, place of supply, everything has to be determined keeping the principle in mind. Further, the invoice would have to be issued by the principal. It is also clarified that in case of exports directly from job workers' premises, the LUT or bond, as the case may be, shall be executed by principal. These principles would apply mutatis mutandis in case of supply of waste scrap generated by the job worker. So, in short, in all scenarios, the procedures, the compliances have to be done by the principal, because eventually it is the principal's goods which are getting sold. Only the thing is that they are moving from the job worker's premises, but that does not make the goods the job worker's goods. They still remain the goods of the principal. Now, what is the procedure given? Before supply of goods to job worker, the principal would be required to send intimation to the proper officer. Now, how is this intimation sent? Firstly, what is the document used for sending the goods to job worker? It is the delivery challan backed by the e-waybill wherever applicable. In this particular case, since there is no supply when goods are sent by principal to job worker, so we use the delivery challan. And then this delivery challan is reported, or like what is the requirement, intimated to the proper officer by uploading the details in ITC0 form. So ITC0 form is the form whereby you report this to the department. Then there will be responsibility of keeping or maintaining the accounts of these inputs, attributes. Obviously, it is with the principal. Now, most important part. If these goods are not written back within the time specified, that is 1 year, 3 years, or the extended time, what is the implication? The implication is the law provides that it will be considered as a deemed supply. So, I had sent raw material to you. You were supposed to process it and send it back to me within 1 year. If you fail to do so, this is deemed to be a supply of these goods by me to you. So now for the first time, it will become a supply by the principal to the job worker if you have not returned it back to me within the specified timeline of 1 year, 3 years. Now, importantly, what will be considered as the date of supply? The date of supply will be the original date, that is the date of 1 year back, when I had sent the goods from my premises to the job worker. So, whenever this goods which are sent by principal to job worker are not returned back by the job worker within the timeline of 1 year, 3 years, it will be treated as a deemed supply, and it is a deemed supply from the date of the original removal of the goods. Now, since today we are 1 year ahead, in this particular case, it will be regarded as a late supply reporting, and hence interest would apply. So this is what is very important. Interest for the intervening period shall be paid by the principal. Just a second, should. If such goods are returned by the job worker after the stipulated time period, the same would be treated as supply by job worker to the principal. Now, once I send the goods to you and now the 1 year time limit is over, so I will treat it as supply. Thereafter, when you return back the goods to me, because it will be returned back by you to me, in such cases, it will be considered as supply by you to me. So this is something very unique. My goods going to you and my goods coming back to me will now become a deemed supply because I could not comply with the requirement of bringing back the goods in 1 year. Now, the parallel provisions are also there in section 19, which you study in the ITC chapter. So section 19 says taking input credit in respect of inputs and capital goods sent for job work. So this clarifies that even though these goods which were my raw material or capital goods are sent to the job worker for using it in processing, I am eligible, entitled to take the ITC. Secondly, where the goods are directly delivered to job worker, the requirement in section 16.2 that I will be getting ITC only when I receive the goods is deemed to be complied with when the goods are received at the recipient's end. Then the same point which is mentioned in 143 is repeated here, that when inputs sent for job worker are not received back after completion of job work or otherwise are supplied from the place within the stipulated time of section 143, that is 1 year, it shall be deemed that such inputs have been supplied. Okay. Provided that where the inputs are sent directly to a job worker, that is from my supplier, they had come to the job worker, the period of 1 year shall be counted from the date of receipt of inputs by the job worker. Fine. So the similar provisions are there in section 19. And then you have rule 45. What does rule 45 says? Conditions and restrictions in respect of inputs, capital goods. It says that input semi-finished goods, capital goods shall be sent to job worker under the cover of challan. So we use delivery challan. We cannot use tax invoice today. But if these are not returned back in stipulated time, then we raise a tax invoice. And where the goods are sent from one job worker to another, the challan may be issued by the principal or the job worker. So when I'm sending goods to job worker, I will issue challan. But where the first job worker is sending goods to second job worker after completing its work, then the challan may be prepared by me or by this first job worker, provided that the challan issued by the principal may be endorsed by the job worker, indicating there in the quantity description of goods where the goods are sent by one job worker to another. Provided further that the challan endorsed by the job worker may be further endorsed by another job worker, indicating there the quantity description of goods when the goods are sent by one job worker to another or are returned. So endorsement is required whenever the goods are transferred further by one job worker to another. The challan issued by the principal shall contain all the details as required, and this is the intimation form. So whenever you are sending the goods to the job worker or the job worker is returning back the goods, the details have to be filled in ITC 0 form. This is the form which is the relevant form for intimation. So these are the provisions relating to job worker, which we have discussed. Kindly keep the relevant provisions in mind. Now come to some other point relating to job worker, that is registration requirement. Registration requirement when both the principal and job worker are located in the same state. So a job worker is required to obtain registration only if the turnover computed on all India basis exceeds 20 lakhs, 10 lakhs as the case may be. However, where the job worker is located in a state different from that of principal, where the principal and the job worker are in different states, the requirement for registration flows from 24(1), which provides for compulsory registration of supplier making any interstate supplies. However, exemption from registration has been granted in cases the aggregate turnover of interstate supply of service does not exceed 20 lakh. Therefore, it is clarified that a job worker being a supplier of service is required to obtain registration only in case where his aggregate turnover exceeds the threshold limit, regardless of whether the principal and the job worker are in the same states or different states. Value of goods after completion of job work supplied directly from the premises of registered job worker not to be included in the aggregate turnover. So important is what? Even though the goods are dispatched from the premises of job worker directly to customer, but it is not the supply of job worker. So what is mentioned here is that whenever you are computing the turnover of job worker, the value of goods which are supplied directly from job workers premises are not counted as the turnover of job worker. They are always counted as the turnover of the principal. And then the last part is supply of waste and scrap. So notwithstanding anything contained in above provisions, any waste scrap generated during the job work may be supplied by job work directly from his place of business on payment of tax if such job work is registered, or by the principal if the job worker is not registered. So if any waste or scrap is generated, we all know that supplying of waste of scrap in itself is an independent supply, and it is also liable to GST as per the regular provisions of GST. In this particular case, the waste and scrap will have to be supplied, and in such case, if the job worker is registered, it is to be supplied by the job worker directly. And if it is not registered, then the principal will be supplying it. That is, it will be shown as the supply of principal. In simple words, in any case, proper tax has to be discharged. So this is what is the point relating to supply of waste and scrap by job. Now we'll just take a 2 minutes comfort break so that we can go to the next chapter. So just allow me 2 minutes. Just 2 minutes. Now we go to the next topic of assessment and audit. Now what does this chapter provides? Different ways to assess the tax liability by a registered person. A registered person may assess his tax liability in two ways, depending upon the circumstances. One is provisional, one is the final or self-assessment. What is provisional assessment? So see, it is always the responsibility of the taxpayer to make self-assessment, that is, assess its own liability by itself. However, there may be a possibility that the taxable person is either unable to determine the value or the rate of tax on the goods which are supplied. Now, in such a case where the taxpayer is unable to determine the rate or value, then the law provides that the taxpayer may approach the department. How? The taxpayer shall make an application along with the documents in support of the request. The proper officer, after calling for the necessary information that it wants and documents that it requires, will issue an order indicating therein what the value or the rate or both, which the taxpayer may apply on provisional basis. So the taxpayer can use the rates or the values provided by the officer for making its assessment, and the officer may demand a bond so that in case tomorrow there is any difference, that difference can be recovered using the bond. This bond may be with security. So there would be the amount which will be specified by the officer, of which the taxpayer has to issue a bond and if asked for even security. Now this is the stage which is called as provisional assessment. But provisional assessment, whenever it is done, has to be concluded by a final assessment. What is that? So today the officer has provided you with a temporary or a provisional rate or a provisional value. And thereupon you are asked to provide further details documents which the officer will demand. And on provision of those documents, the officer will finalize the assessment and give you the final rate or value, which is called as final assessment. On final assessment, if there is any tax payable, you pay the difference because you had paid lesser at the time of provisional. However, if the provisional tax was paid higher than the final assessment, you can claim for refund. In first case, where you have to pay the difference tax, that carries interest. In the second case, where you are asking for refund, there is no interest if the refund is made within the specified time. Now, what are the different types of assessments provided under the GST law? Self-assessment done by the taxpayer, provisional assessment where the taxpayer requires the officer to provide a temporary rate or value. After the taxpayer has done the assessment, the officer can scrutinize the returns. Next, where the taxpayers are not filing returns, the officers are provided the option of best judgment assessment, that is the assessment for non-filers. Next, where a person has not taken registration, but the officer deems that the person should have taken a registration, again here, the officer can make best judgment assessment. And last, summary assessment in some specified cases. Now, let us go to each of these pointers. So self-assessment, this is the regular manner provided in section 59, which says that every person is required to assess the tax liability and to furnish the details by way of a return. Provisional is where the person is unable to determine the rate or value. The payment of tax on provisional basis is done after giving a bond or security. Then the officer will demand for additional information document and make the final assessment within 6 months from the date of communication of the order of provisional assessment. Further 6 months may be extended by JC or additional commissioner. Now, and 4 years by commissioner. If there is short payment of tax, you have to pay the differential tax with interest. If there is excess tax, the excess tax shall be refunded, and there will be interest only if this refund is provided late, but there is no interest for the intervening period. Scrutiny of returns. So in order to verify the accuracy of return, the proper officer may examine the return and seek explanations. So basis the returns filed, the officer can carry out scrutiny. Then at the time of scrutiny, if the officer seeks or desires to know any information or detail, the officer can ask for, and you are duty bound to provide for that explanation. If the explanation offered is inadequate, the officer will proceed for taking appropriate action. But if it is proper and satisfactory, then the entire matter will get closed. If no adequate explanation is offered or no corrective measures, then the proper officer has the option of carrying out one of these actions. So either your explanation provided is not acceptable, or you have not provided any proper explanation. Then the officer is open to proceed with any of these actions. Next is assessment of non-filers of returns. If the return is not furnished, even after service of notice under 46, the proper officer shall assess the liability of tax within a period of 5 years from the date specified under 44. 44 is annual return for furnishing of annual return. So, if no return is filed, firstly the officer sends you a notice or letter under 46 demanding you to file the return. But even after that, if you are not filing the return, then the proper officer will proceed to assess your liability. Assessment of unregistered person. So unregistered person means the person who are actually liable to take registration because they had a turnover exceeding the specified limit, but they did not apply for registration and hence they are unregistered. That is what is unregistered over here. Now, proper officer, to the best of his judgment, may issue an assessment order within a period of 5 years from the date specified under 44, that is the date for filing annual return. So a total of 5 years is provided to the officer for making a best judgment assessment in both these cases. One, those persons who have not filed any returns and despite of sending them notice are not filing returns, or the person who are not or who have not taken the registration itself in the first place. Then what is a summary assessment? Proper officer may issue an assessment order imposing tax on a person based on any evidence showing a tax liability. So wherever the proper officer feels that there is any liability to pay tax, the proper officer shall issue this particular order, obviously after complying with the provisions. If the person to whom liability pertain is not ascertainable, the person in charge of the goods shall be assessed. If order is erroneous, proper officer may withdraw such order and follow the procedure laid down in 73-74. Now in 73-74, the officer has to follow a detailed procedure of first sending you intimation, then sending you notice, and after giving you an opportunity of being heard and looking after taking note of all your submissions and assessing whatever submissions you have done. Thereafter, the officer will make a proper order. This is what is the procedure 73-74. But in special circumstances, as we studied here, the officer can proceed to directly pass an order. Now, next topic here is audit. Now we all understand as students of CA final what an audit is. So in a very layman's language, audit is the scrutiny of your records. But when we talk about audit under a taxation law, the perspective of this audit is different from our regular financial audit. In this case, the objective of this audit is to assess one, whether proper taxes have been computed and paid. Second, whether proper ITC has been availed. Third, whether all the procedural compliances required under the law have been complied with. So that is what is the audit provided or envisaged under the GST law. Now there are two sections, 65 and 66, dealing with the audit. First is the audit done by the authorities. Second is where the authorities appoint some cost accountant, chartered accountant who carries out the audit and submits the audit report to the department. Now, first case, commissioner or any officer authorized by him may undertake audit of a registered person. The audit may be conducted at the place of business or maybe in the office of the officer by demanding the documents in the office. Now, at least 15 days prior notice should be given. So before the department is coming for audit, they have to give 15 days notice so that you can be ready with all the necessary documents entries. 3 months is the maximum time period during which the audit should be concluded. Extension, maximum 6 months. On conclusion, the registered person shall be informed about the findings, the insights, or whatever information has been gathered by the officer. This is by way of issuing the audit report. If this results in demand of tax, then the officer shall proceed to initiate the action under section 73 or 74. Next, what is special audit? Whenever at any stage of scrutiny or investigation which is going on, the assistant commissioner is of the opinion that the value has not been correctly declared or the credit is not properly availed as per the provisions, then it may nominate a chartered accountant, cost accountant to carry out the audit. What is the time period given? 90 days, which may be further extended by 90 days. The audit will be conducted even if the accounts have already been audited. So you may be liable for audit under any other law. Still, if this audit is uh, approved by or ordered by the commissioner, then this audit has to be compulsory done. If it results in demand of tax, again the same rule, the proceedings as per 73-74 will be applied. This is what is the provisions relating to assessment and audit under the GST law. Now we proceed to the next chapter, which is a very important chapter, that is inspection, search, seizure, arrest. Now these are all different terms. The powers are contained in different provisions. Now what are the important points? Circumstances for carrying out inspection. An inspection can be carried out only after a JC or officer of higher rank gives such authorization. So first requirement for carrying out inspection is there has to be a proper authorization given by a proper level of officer. Now this authorization will be given by this high rank of officer where the officer has reasons to believe what? The taxable person has suppressed any transaction of supply of goods service, suppressed stock of goods, claimed input tax rate in excess, or contravene any of the provisions of the Act to evade tax. So most important is this type of inspection investigation will be authorized by the JC only where the JC has sufficient inputs or some information so that the JC believes that the person has suppressed any transaction of supply of goods service or the person is trying to contravene the provisions of the Act with the intention to evade tax. Next, where any person who is engaged in transportation of goods or an owner or operator of warehouse or a godown or any other place has kept goods which have escaped payment of tax or has kept his accounts or goods in a manner that is likely to cause evasion. So such inspection can be carried out with a transporter also if again the JC or the higher authority has reasons to believe that such a transporter or the person who is owner of any vehicle or who is owner of any warehouse or godown, such a person has kept goods on which tax has not been paid or has kept its accounts or goods in a manner that it may lead to tax evasion. Now, what is very important in this is that in order to carry out any inspection, the first requirement is that the officer should have reasons to believe. Now, what is reasons to believe? It means that the officer should be having the knowledge of the facts which, even though it is not amounting to a direct knowledge, would cause a reasonable person having the knowledge of the facts to believe or conclude the same thing. So it means he should have a concrete information. It should not be some type of what you say rumors or some types of gossips or some stories being said by someone about someone. There has to be some concrete information. As per section 26 of IPC, a person is said to have reasons to believe if he has sufficient cause to believe that the thing, but not otherwise. It means the person has sufficient data information which leads to a particular belief. Reasons to believe contemplates an objective determination based on intelligent care, evaluation as distinct from purely subjective consideration. So it should not that the officer has a personal uh, thought or a personal opinion. It should be an objective determination based on a proper evaluation. So this is what is reasons to believe. So as it is further clarified, it is more than a mere suspicion, but less than evidence in possession. Now, next is search. Now, you all would have definitely come across the provisions of search in income tax. You will find that the GST law search, especially the search procedures, are very much in the same fashion how they are designed for income tax. Now, what are the provisions relating to search? Either pursuant to inspection, that is the above provision, or otherwise, if it is felt by the officer that any goods which are liable for confiscation under the Act or any documents, books, or things are secreted, that is, they are hidden, or any books which may be useful or any document information which may be useful by the department in any of the proceedings are secreted or maybe tomorrow destroyed, then the department can search and, if required, seize those goods or documents and books. So, what is very important is search and seizure. This generally go complementary because why you are going for search? Because you have that information which is sufficient to prove that the person is trying to hide, the person is trying to secrete some important information, some data, some books, or some goods. And most importantly, why you seize them? Because if you don't do it today, then the entire purpose of search is gone, because tomorrow these goods, these documents may be disposed of, may be sold, or may be hidden at some other place. Now, the law provides the power to the enforcing officer to check the evasion. Importantly, this section 67 says that the search seizure can be carried out by JC or officer higher in rank or by an officer authorized by such person not below the rank of JC only if he has reasons to believe that any goods that are liable to confiscation or any documents or books which in his opinion shall be useful for or relevant to any proceedings are secreted. So two things should be present. One of the two things should be present. The JC should have reasons to believe what? That there are goods which are liable to confiscation, or there are any such books, documents which will be useful for any other proceedings under the Act, and these are secreted in any case. Seizure, which is not dependent on the GST law, would mean an act of taking physical custody of what? Of property by an officer applying the legal process. So it means where your rightful property or your ownership goods, properties, documents are taken away by the department. That process is called as seizure. Now, it generally implies taking custody forcibly, contrary to the wishes of the owner of the property or who has the lawful possession and who is unwilling to part with the possession. The person from whom documents, books are seized shall have the right to take copies of such documents and books subject to the approval of the officer. Then comes something called as confiscation. Now, many times you come across these words, seizure, confiscation. What is the difference? See, seizure is a type of an action whereby something is taken away by the department so that you are not having the possession of that particular thing or you are not able to dispose it of. Confiscation is a type of an action whereby the goods are sort of permanently taken away by the government and they may either not be returned or they will be returned only after you make payment of some proper penalty or proper fees. So confiscation is more of a severe action, and confiscation is the permanent takeover of the goods by the department. So there is a specific provision under the GST law which provides for the provisions of confiscation, section 130. What it says, goods shall be said to be liable for confiscation where any person has done the following. What? Supplied or received the goods in contravention of any of the provisions of the Act or rules with intent to evade the payment of tax. Does not account for any goods on which he is liable to pay tax. Supplies goods liable to pay tax without having applied for registration. Now, if you see in all these provisions, what is commonly flowing is that the goods which are presently in your custody, which now the act allows me to confiscate, are such that they have some duty, some tax embedded, and one of these actions are done by you, which clearly shows your intention that you have an intent to avoid this tax. Fourth, contravening any of the provisions of the act or rules made thereunder, again with the intent to evade payment of tax, or use any conveyance as a means of transport for carrying the goods in contravention of the provisions of the act. So in all these cases, your intention is to deal with the goods in such a manner that you will be evading payment of tax. This is where the law assumes the power to confiscate these goods. In case of search and seizure, as we saw above, the goods were such which had already become liable for confiscation and now you are hiding it, so have been coming for search. So search can happen where the underlying goods have already committed one of the above offenses. That is, they have become liable for confiscation and now you are trying to secrete them, you are trying to hide them. Hence, I've come for its search and eventually seizure. Now, the next part is what are the powers given to the officer during search? This part is exactly similar to what you study in income tax. So they have power to break open. They have power to enter any place during any time. There is no requirement. It should be only business hours. They can enter even your personal property, your house, your second home, wherever they have information that you are secreting the goods or documents. And while carrying out all these options, they have power to check anything, any place, or even any person or premises. If your books are kept in electronic form, they also have power to demand for the password. And if you're not providing them, then take away your hard disk and also. All these are the provisions embedded in search and seizure action. Now, once the goods are confiscated, if you want these goods back, what is the manner of getting these confiscated goods released? So they can be released on provisional basis on executing a bond or furnishing the security or payment of applicable tax interest. In case seizure of goods, a notice has to be issued within 6 months. If no notice is issued within the period of 6 months, then all goods shall be returned. However, this period of 6 months can be extended by the proper officer by another 6 months. Disposal. The government may, having regard to the nature of the goods or their hazardous nature or perishable nature, or if the goods are depreciating in value with passage of time, or because of constant of storage space for the goods or any other relevant consideration, notify the goods which shall be disposed of by the proper officer in the prescribed manner. If during a search such specified goods have been seized, the proper officer shall prepare an inventory in the prescribed manner. Now, what are the requirements to be observed during such operation? Following principles should be observed. No search of premises should be carried out without valid search warrant. So, for carrying out search, there has to be a search warrant, which is, besides including the name of the person to be searched, also including the details, the address of the premise which has to be searched. It means a search cannot be conducted at a particular place until the name of the place, the address of the place is covered in the search warrant. So search warrant may be issued for a person, but it does not mean it can cover any premises belonging to that person until and unless those premises are referred in the search warrant. There should be a lady officer accompanying the search team, especially when they are going to residence, because at residence you may have female family members being present. So it is a compulsion by the Indian Penal Code and it has to be strictly followed. The officers before starting the search should disclose their identity by showing the I cards. The search warrant should be executed before the start of the search by showing the same to the person in charge. of the premises, and his signature should be taken on the body of the search warrant in token of having seen the same. So wherever a search warrant is given, is uh, is there with the officer should show that search warrant to the person of that particular premise and take his signature that the person has read and is accepted the search warrant and is allowing the officers to carry out the search in the legal manner. Next, the search should be made in the presence of at least two independent witnesses from the locality. If no such inhabitants are available, the inhabitants of any other locality should be asked to witness the search. So even in movies, when you see, you'll find that there is a scene where they ask some local, respectable, or known persons to come and be present during search. Why this is required? So that tomorrow there should be no allegation that one, the officers have misbehaved, or the officers have themselves carried out some illegal act. They have themselves brought and kept something inside the place and are pretending that they have searched it over there. So to avoid all these type of future complications and to ensure a lawful execution of these very strict provisions of search, the law requires that you should have two witnesses who are independent, that is not from the government domain, and who are also known in that locality. Before the start of such proceeding, the team of officers conducting the search and accompanying witnesses should offer for their personal search to the person in charge. So this is the point where before the officer starts the search or enters your premises, you should search them to ensure that they are not carrying any such thing which they can come and place in your premises and then allege that this have been found in your premises. Again, before they leave, again they should offer themselves for their search so that again you are satisfied that they are not carrying along with them any of your personal belongings. Then a panchnama of the proceedings should necessarily be prepared on the spot. A list of all goods, documents recovered, detained should be prepared and annexed to the panchnama. The panchnama, the list of goods, documents, detained should invariably be signed by the witness, the in charge owner of the premises before whom search is conducted, and also by the officers. So this panchanama is basically, you can say, a detailed document which lists out as to what all things have been found out in the search, plus if any goods or if any valuables have been identified, a proper list is prepared, and if anything is seized or detained, again a list is prepared. After the search is over, the search warrant duly executed should be returned in original to the issuing officer with a report regarding the outcome of the search. So the officer who's conducting the search has to hand over the search warrant to the main issuing officer. The name of the officers who participated in the search may also be written on the reverse. The issuing authority of search warrant should maintain register of records of search warrant issued and returned, and used search warrant should be kept in the records. So this is very important because if tomorrow the matter goes into litigation, each document carries a lot of weightage in court. A copy of Panchnama along with its annexure should be given to the person in charge owner of the premises being searched under acknowledgement. Now, search warrant and its contents. This I'm just skipping. Now, section 68. This is the provision, you can say, relating to the e-waybill action. So we have studied that you have to compulsorily prepare an e-waybill, which is provided for in section 68 read with rule 138. And if the e-waybill is not prepared, your goods which are allowed to be inspected while they are in movement can be detained. So this section 68 authorizes the proper officer to check the goods in movement and check the relevant documents including the e-way bill. The detailed provisions will be studied separately. Very important, power to arrest. Now the term arrest has not been defined. However, as per judicial pronouncement, it denotes taking into custody a person under lawful command or authority. So what we normally refer to as arrest is nothing but taking the custody of a person. So till now, when we were talking about seizure, we were talking about confiscation, it was relating to goods. Arrest is a type of seizure of the person. So how you seize goods? Here you are taking the person into custody and the person will now be under your command. That is what is arrest. In other words, a person is said to be arrested when he is taken and restrained of his liberty by the power or color of a lawful warrant. So where a person who is having an authority like a police or any other CBI, etc., they find that a person is antisocial or a person is a willful and a regular evader of tax or a person is a regular defaulter, then to avoid the person fleeing away, to avoid that the person causes any damage, the law has authorized such persons to take the person into custody. But you have to remember that whenever a person is taken into custody, the person is restrained from his fundamental rights of liberty. That is why we always find these bail cases and all things going on in the court only on one principle, that is principle of your natural justice and the fundamental rights provided in the Constitution. Arrest can be carried out only where the person is accused of offenses specified for this purpose and of the amounts involved is more than the specified limits. Now, what are those amounts? What are those limits? That is a part of the penalty chapter. Now, authorization of arrest by the person. So what it says, commissioner may authorize any officer to arrest a person if he has reasons to believe that the person has committed an offense attracting a punishment under one of these sections. The provisions relating to these sections have been discussed in another chapter. Now, broadly, just for your information, this essentially means that a person can be arrested only when the tax evasion is more than 2 crores. However, the monetary limit is not applicable if the offenses are committed again. That is for repeat offenders and repeat offenses, they can be arrested irrespective of the tax amount involved. Now, what are the safeguards of a person who is placed under arrest? This is again important. What are the safeguards? They are provided in section 69. What it says, if a person is arrested for a cognizable offense, he must be informed in writing of the grounds of arrest and he must be produced before a magistrate within 24 hours of the arrest. If a person is arrested for a non-cognizable and bailable offense, the deputy or assistant commissioner can release him on bail and he will be subject to same provisions as an officer in charge of police station under section 436 of CPC. All arrests must be in accordance with the provisions of CPC. Now, what is this cognizable and non-cognizable offense? So cognizable means where the officer who is carrying out this arrest can himself or herself take the cognizance of the offense. That is, he does not require permission of any other authority to decide whether or not to arrest. In other words, the officer himself is acting as a you can say judge to decide whether or not arrest has to be done, and where the officer feels that yes, the grounds provided in the law exist, the officer can himself or herself arrest without taking the permission of any higher ups. That is what is cognizable. Second is non-cognizable or bailable means what? The officer who is arresting is only asked to arrest the person, but the officer is not the final authority, and hence the higher authority, which in this case could be deputy or assistant commissioner, can release the person immediately on bail. So in such cases, like here when we saw the above provision of 2 crores, in case of arrest of 2 crores, the person can be immediately released on bail, and over here provisions of section 436 of CPC shall apply. Section 32 of GST Act also provides that which type of offenses are cognizable and which are non-cognizable. What are cognizable? Means serious category of offenses in respect of which the police officer himself has the authority to arrest without a warrant, and to start investigation with or without permission of court. Whereas non-cognizable means offenses are relatively less serious and in respect of which a police officer does not have the authority to arrest without warrant. Warrant is like a permission from the higher authority. Cognizable, non-cognizable, 132 provides that offenses relating to taxable goods services where the amount of tax evaded or the ITC wrongly availed exceeds 5 crore shall be cognizable. That is, they will be non-bailable, and in such cases, the bail can be granted only by the judicial magistrate. Other offences under the Act are non-cognizable, bailable, and all arrested persons shall be released on bail by the Deputy or Assistant Commissioner itself. Now, precautions. The provisions of CPC relating to arrest and procedures under that Act must be adhered to in all situations. It is therefore necessary that all field officers must be fully familiarized with the CPC. One important provision to take note is Section 57 of CRPC, which provides that a person arrested without warrant shall not be detained for a period longer than under the circumstances of the case is reasonable, but this shall not exceed 24 hours. So within this period, as provided under Section 56 of CRPC, the person making the arrest shall send the person so arrested without warrant before a magistrate having the jurisdiction. Then there are some guidelines for arrest. Now, the next part provided in the GST law is summons. What is summons? Summon is basically ordering a person to be present so that the person's statement can be recorded. So many times you require some information and that information may not be present somewhere in some records or document, but that information can be provided by a person like a director, MD, CEO, partner, etc. So in such cases, the law has the power to issue summon. So summon is like a warrant only, but this warrant is only asking the person to be present to provide the necessary information. And in such cases, whatever the person says, the statement of the person is recorded on oath. What is the meaning of recording a statement on oath? In such cases, when the statement is recorded on oath, the person is indirectly taking a pledge or taking a vow that whatever the person is saying is true and correct to the best of the knowledge. And tomorrow, if these statements are found to be uh, false, that itself becomes another offense under the provisions of the CPC and CRPC. Responsibility of person so summoned. A person who is issued summon is legally bound to attend either in person or by authorized representative and is bound to state the truth before the officer. Consequences of non-appearance. The proceeding before the official who has issued summon is deemed to be judicial. If a person does not appear on the date when summoned without any reasonable justification, he can be prosecuted under Section 174 of the Indian Penal Code. If he absconds to avoid service, he can be prosecuted under 172 of IPC. Guidelines. Summons are to be issued as last resort where persons are not cooperating, and this section should not be used for summoning the top management. The language of summon should not be harsh and legally worded in such manner which causes unnecessary mental stress, embarrassment. Summons by superintendent should be issued after obtaining prior permission from officers not below the rank of AC. Where for operation reason it is not possible to obtain such prior permission approval, oral telephonic permission from such officers must be obtained and the same may be reduced to writing. In all cases where summon is issued, the officer issuing summons should submit a report of or should record a brief of the proceedings in the case file. Senior manager officers such as CEO, CFO, general managers of large companies should not generally be issued summons at the. So these are some of the provisions. Precautions to be observed. While following precautions should be generally observed when summoning a person. A summons should not be issued for appearance where it is not required. The power to summon can be exercised only when there is an inquiry being undertaken and the attendance is considered at most compulsory. Normally, summons should not be issued repeatedly. As far as practicable, the statement of the accused or witness should be recorded in minimum number of appearances. So it should not happen that just to trouble the person, you are giving repetitive summons. The time of appearance given in the summons should be respected and no person should be made to wait for long hours before the statement is recorded, except when it has been decided very consciously as a matter of strategy. Further, preferably, statement should be recorded during office hours. However, an exception could be made regarding the time and place of recording statements if there are some special circumstances. Now comes section 71. Now see the heading. It says access to business premises. Now somebody will say, sir, even in case of search, we access the business premises. So what is the difference? So I'll just try to equate it with something that you study in income tax law. In income tax law also we have search and we have survey. That is what is the difference here also. Here also we have search in section 67(2) and we have survey, which is indirectly called as access to business premises. So what it says, the JC or any officer higher in rank can have access to any business premises which may be required only for the purpose of what? Carrying out any audit, scrutiny, verification and checks as may be necessary to safeguard the revenue. During such access, the officer can inspect the books of accounts, documents, computer programs, etc. So persons cannot be checked or you cannot go and search in different parts of the places. So it means you will go there, you will ask them to provide the documents and you will only scrutinize the documents. So this is something similar to survey of income tax law. It is duty of the person in charge of such premises to furnish the required document within 15 working days from the day when demanded. Similarly, the person in charge of business are also duty bound to furnish such documents to the audit party deputed by the proper officer or the chartered accounts accountant who has been deputed. So here, whenever the officers or their deputed CA, CMAs are coming to your office for audit, that is also part of this section. The following records are covered under the provisions and are to be produced compulsory. First, the records prepared and maintained by the registered person and declared to the proper officer, trial balance, statement of final accounts, that is P&L balance sheet, cost audit report if applicable, income tax audit report if applicable, and any other relevant report. The power under this section may be contrasted with power under section 67. So 67 is the inspection or the search power. How it can be contrasted? It may be noted that the circumstances when each of these sections are applicable are not similar. 71 is more general in its scope and extent, which predominantly gives access to place of business of a registered person to inspect only books, etc., for carrying out audit, etc., etc. So this section's applicability is limited. The person can only come to business premises and for a limited purpose of scrutinizing your books and documents. Officers to assist proper officers. So whenever a departmental, that is GST officer, is going for any of the above actions, section 72 provides that the officers from other departments can accompany the GST officer for helping the GST officers carry out their functions. Who are these other department officers? Police officers, railway officers, custom officers, officer of state or UT or central government engage in collection of GST, officer of state UT engage in collection of land revenue, all village officers or any class of officers as may be notified. So these are the different provisions relating to inspection, search and arrest. So we have completed these 4 small chapters. Now we'll take our break of 15 minutes. And after the break, we will go to the next important topic, which is scheduled for today. So 15 minutes break, we start at 8 o'clock.